EV stocks joining AI names and leading the stock market rally driven by Tesla's 13 straight days of gains. But that record just broken with a modest decline today. Let's bring in Yahoo Finance's Inez Ferre for that. Inez.
And guys, speaking of AI, investors have been piling on the EV stocks lately. Part of that having to do with that craze because of AI. I'm going to pull up a 10-day chart so you can see here Tesla up 25% over the last 10 days. In fact, year to date, this stock is up a whopping 108%.
Morgan Stanley has just revealed Tesla's biggest money printing machine. This is a strategic approach that could help the automaker penetrate deeper into the EV market, further solidifying its long-term position as global leader in the EV business. In today's video, we're going to unravel the hidden potential of this expert approach and explore the extraordinary reasons why Tesla is poised to generate huge revenue from this. Get ready to have your expectations shattered as we reveal the untold story of Tesla's secret weapon. This is a revelation that is going to leave you in awe. So join us as we embark on a journey to uncover Tesla's strategic incoming masterpiece and how this could translate into a lucrative revenue stream. Let's get into it.
Is a powerful thing. 12 days in a row for Tesla. They got the new battery partnerships with GM and Ford. Those were, perceived by some to be game changers, and the stock has reacted in kind.
Yeah, I mean, it's a momentum market, and if you get a little bit of momentum, you see it move all the way. We'll talk about Oracle later on. That's another case of momentum. So the fundamentals don't even have to accompany the price increase. For Tesla, they've had some bunch of good news. The battery partnership, Musk also getting somebody to run Twitter so he doesn't have to divide his time as much. You're seeing more adoption, the market growing bigger with EVs. But look, at some point, valuation becomes unreasonable. And at the end of the day, they haven't had to advertise ever in their history until now. Now they have to because you've got so many more choices. So,
American multinational investment bank and financial services company Morgan Stanley just disclosed one important growth factor that Tesla needs to incorporate into its business, especially if it plans on capturing more of the EV market. According to Morgan Stanley analyst Adam Jonas, Tesla is favorably positioned to capitalize on this growth factor, which could actually turn out to be rather lucrative. And it could be a carefully managed and conservative profit generator. Hey guys, welcome back to Tesla Tomorrow. Many automakers have some sort of captive financing unit or a subsidiary financial company that offers loans for its retail sales. For example, firms like Toyota, Honda, and Ford use their respective financing arms to offer financing for prospective buyers. General Motors benefited heavily from this strategy several years ago when it founded GMAC for the purpose of offering financial solutions to its consumers. It is said that this forward-looking financial expertise was one of the primary drivers behind the subsequent mass adoption of car ownership, and is the second only to the moving assembly line. According to Morgan Stanley, investors shouldn't be surprised if Tesla were to soon launch its own full-scale financing arm as part of the company's efforts to pull more customers and grab more share of the electric vehicle market. But what does this mean for Tesla and its investors? Let's find out. But before we get into it, if you like this type of content, hit that like button, subscribe to our channel, and turn on post notifications to keep up to date on everything happening with Tesla. Morgan Stanley cited in a recent note that financing is now the norm in the auto industry, adding that while most of Tesla's early sales were done in cash, it's matured as a company, and it's now got the cash flow to support a financial company. The firm noted that Tesla possesses a strong balance sheet and cash flow, which acts as a stable foundation. And there's also the potential for a banking ABS partnership and an expansive downstream network. Adam Jones explained that he thinks investors should prepare for Tesla to begin building a large, full-scale captive financing subsidiary as the market matures. and this is there to facilitate the potential IRA leasing rules, which could become a major driver as well as several other factors. He noted that these factors included the need for a smoother sales process and the industry norm of offering financing options. According to Jones, Tesla is well positioned to make informed leasing decisions because of its wealth of data. And without a comprehensive financing option, the automaker risks missing out on potential sales opportunities. The bank's analysts wrote, "For years, Tesla could sell a car for cash or minimal leasing. But as Tesla looks to acquire the next 5 to 10 million, customers require new solutions in a market where 90% are bought on monthly payment. We think the time for full-line Tesla Finco has finally arrived." In his explanation, Adam Jonas stated that Tesla can take advantage of the leasing loophole in the IRA. However, despite the prediction, Jonas still states Tesla shares are an overweight rating, giving it a $200 price target. But seeing that shares have already more than doubled so far this year, this could be an indicator that something even bigger is coming to Tesla investors. There have been a lot of positive updates for Tesla recently. In similar news, Tesla applied for regulatory approval to expand its Shanghai plant and start making pouch-type battery cells in small numbers. This report came from a notice posted on the website of the district, where the plant is located. The notice stated that the expansion would grant Tesla's Shanghai Gigafactory the capacity to produce 1.75 million powertrain units annually, up from 1.25 million currently. Pouch-type cells are a kind of lithium-ion battery used by other car makers. A trial production line for the battery cells would reportedly have an initial annual capacity to produce 20,000 amp-hours of cells, according to reports. Although this number is just small in itself, it's likely enough for only a few units of the Model Y or Model 3, but the Tesla move is actually a step in the right direction. The EV market in China has experienced significant growth and has become the largest EV market in the world. The country's government has actively supported the development and adoption of electric vehicles as a part of its efforts to reduce air pollution and dependence on fossil fuels. There are also several other important factors to note about the Chinese EV market that justifies Tesla's expansion plan as a positive move. China has the largest EV market globally, both in terms of sales and production. The country's strong government support, subsidies, and incentives have driven the rapid growth of the EV sector. The government has also implemented various policies and incentives to promote EV adoption. These include purchase subsidies, tax breaks, and exemptions from certain restrictions, like license plate quotas and traffic restrictions. It has set ambitious targets for EV sales and has required automakers to produce a certain percentage of new energy vehicles to receive credits. The Chinese EV market has seen significant technological advancements. Domestic automakers have been investing in research and development to improve battery technology, range, and overall performance of electric vehicles. Additionally, China is also a major player in the production of lithium-ion batteries, which are a crucial component for EVs. In terms of charging infrastructure, Tesla has invested heavily in building a robust charging infrastructure to support the growing number of EVs on the road. The country's got a vast network of public charging stations, including fast chargers, which have actually helped address one of the key concerns for EV adoption. If Tesla does continue to expand in this kind of market, it could potentially do a lot of good for the automaker. But what do you think? Let us know down below. And if you want to know more about what Tesla's been up to over the last few days, go ahead and click on this next video on your screen. See you there.